Welcome to the final video in the renovation playlist from our knowledge base. In this video, I'm going to take you through Property Analyzer. So once you've found a property and you've done all your research around it and you really want to crunch the numbers, this tool can really help you decide whether you perhaps want to renovate and sell the property, or perhaps even renovate and keep the property for rental yields. So there are two ways to actually access this tool. So on the home page, you can actually click on Property Analyzer, and this will open up a page where you can just enter in any property and start essentially from a blank screen where it takes you through a wizard and you'll start entering in information as you go. So again, integrated with Google Maps, so it's just a matter of finding the address, putting in the attributes of the property, hit add, and then you've got blank fields to essentially fill in. Now, some of the information will be pre-populated. If you've completed your default profile, this is where that data comes from. Now, the second option is if you've actually found a property of interest through Investor Search, you can actually use a more automated way of running Property Analyzer. So from the listing itself, the red button at the top here, Analyze in Full, if you click on that, it will bring across some of that information from the listing over across for you. So if there is an advertised rent, it will actually enter that in there. If not, based on the advertised price, our system can estimate what that rental might be based on the price for that area, purchase price and market value. So again, this is going to be a good opportunity for you to perhaps run the report multiple times and in different scenarios. Perhaps if you can get at a cheaper price, you can then see what that property looks like from a financial point of view, or if you know that the property is in high demand, you might need to overpay a little bit more, what that would look like from a return point of view and whether it's going to be worthwhile at all. So you can update these filters, and whether you're buying the property under your own name or under a different entity, perhaps under a trust structure, company or a self-managed super fund, you can actually change that at this point as well. This is going to be important as we run the report. Tax is taken into play, and obviously you want the correct tax brackets and tax forecasts, so you can just create a new entity and apply it at this particular point in time. Otherwise, once you're happy with that information, you can hit next and it will actually run that report for you. So again, the report already has taken into consideration data from your default profile, which you may have already set up, so all your expenses, loan repayments, etc. But if you haven't, you do have the opportunity to click on Edit, and you can go through the wizard and update any information. So perhaps the purchase amount they've accepted a cheaper offer. You can change that amount here. You've got the opportunity to put in perhaps renovation expenses, so capital improvements at purchase. So perhaps you're putting in $40,000 worth of work. We have a stamp duty calculator, solicitor's costs, and you can also enter in any other costs associated as well. So anything perhaps from maybe building and pest inspections. You then got your loan information, so you can indicate who your lender is. If you've got multiple loans, you can just add the plus sign and add in additional loans, loan length, type of loan, whether it's interest only, principal and interest rate, and any other costs associated with it. Once you've entered all that information in, it will calculate your total purchase cost. Once you're happy with that, you can then click on Rent and Expenses. Okay, you can update your weekly rent here, rate of occupancy. So if you believe that there may be times where the property may take a little bit longer to rent out, you can then change that accordingly. We also have a holiday rental option there too. And then your annual property expenses. So once you've entered in all your annual property expenses, all the most common expenses we've allocated, but we do have an other filter here as well. Once you've done that, it will have the total annual rent and then your total annual property expenses, and then you can click through to the last page being tax and market. So in the tax and market page, we've got assign an entity. So again, we would have done this already, but if you need to change it, you can click on the drop-down box and allocate an entity that you've set up previously, or you can create a new one here. Market factors, so this is going to be used for forecasting, so CPI or inflation. You can get this information from the Australian Bureau of Statistics. I think it's about 1.3 currently. Again, you can change this figure for worst case scenario if you like. Capital growth, so we do, where available, provide you historical capital growth for the type of property you're looking at in the area. You can see here it's 8.2% for houses in Northgate. So if I can use that same figure, I can be a bit more optimistic because I know from the research I've done there's a lot happening there, more jobs, population is growing, or I know that perhaps that the market may be slowing down, I can be a little bit more conservative. So I can put in maybe a 6% figure instead. If you're paying land tax, you've got the opportunity to indicate that figure in here as well. We do provide depreciation calculator in here via our partner Washington Brown. Just simply confirm 4 filters: quality of the property, property type, nearest capital city, and the year that it was built. And you can opt to take this out if you don't want to include it. Once you've done that, hit results and it will take you back to that report. So it breaks it up, year 1, 3, 5 and 10. You do have the opportunity to edit the future year's forecast if you like. Perhaps capital growth rates change, or you decide to pay principal, you can update that information. You can show all years 0 to 10, so they'll detail that out. Otherwise then it will give you some really good information about what your property potentially would look like. So property value, today we estimated it worth $465,000 based on a 6% average capital growth rate. You can see in year 10 what that looks like. Statistics, how much equity you're building to the property, and then more interestingly, we also show you any surplus equity that you may have to be able to reinvest and what that translates into buying power. So rental income, it then calculates your gross yield, your net yield percentage, and then your cash deductions. So this is where then it takes into consideration your property expenses, your interest repayments, and then it will work out your pre-tax cash flow per annum and per week. Obviously in this case, being red, it indicates that you're going to need to fork out additional cash to be able to cover the expenses, that the rental income itself is not going to cover it. So in this particular case, it's not going to be a positive cash flow property. If you've included depreciation, the figures there, you've got your total deductions, you'll then work out your net profit and loss, tax refund, and then what your after-tax cash flow per annum and per week is. So a really detailed report. You can then save it if you like, simply hit add to save and access it later on. You can then rerun figures if you need to. Perhaps you need to check some of the expenses with the listing agent. If you end up buying the property, you can then move it to Portfolio Tracker. That's where you can then manage your property moving forward, or you can edit the details. You can then click on graphs. We've just got 3 simple graphs here just to give you an idea of who's paying for the property. So you can see in this case here that you in red means that you need to put in additional cash to cover both the loan and property expenses, market value versus loan, and then you've got your cash flow pre-tax and after tax lines here. Click on summary, final page. So then we just combine year 1, 3, 5 and 10, the snapshot, those stats with the property ad itself, market statistics, so the suburb data that we have from investor searches added. You've got the opportunity to add in your own notes, perhaps any documents that relate to the property from the inspection, and then you've got your links as well. So we've combined everything into the one page for you. So that's Property Analyzer. You can then print view, so you can print that off if you want to, analyze it, crunch the numbers, take it to your accountant or your mortgage broker and share that information with them. So look, that's the end of the renovation video on Property Analyzer. If you like any more further training, feel free to contact your portfolio manager and we'll be more than happy to help.